everybody, my name is Rishabh and welcome back to my YouTube channel. This is our revision lecture number 3 of SPOM Set A, MCQ oriented fast track batch of corporate and economic laws. In this entire series, we are going to cover the most important chapters of your SPOM Set A law, and in this video I will be also sharing you the chart form summary notes so that which are completely based upon the MCQ, so that you can easily score good marks and clear SPOM examination in the very first attempt. So past two lectures I have uploaded. The last lecture was with respect to appointment of directors. Now the third lecture is with respect to board meeting and its power. So we are going to cover this particular chapter in this video. So do watch the video till end and do let me know in the comment section how did you like the video. Please share it with your friends so that this will be helpful to them also. Now without wasting much of time, let us begin. In this video, we are going to cover section number 173 to section number 192. The most important sections of this particular series we are going to cover in this video. So stay tuned till the end. Now the section number 173 talks about meeting of board. So when the board should hold the first meeting once the company is formed. So the first meeting of the board should be conducted within 30 days from the date of incorporation of the company. And the subsequent meetings, the company shall have at least 4 meetings a year, and the gap between 2 meetings shall not be more than 120 days according to section 173 subsection 1 of Companies Act 2013. And this one, if you see this 4 meetings in every year. This every year means every calendar year, not the financial year. So please keep this in mind. Now moving on to section 173 subsection 2. This talks about directors may attend board meeting in either of the way. So it is not necessary that director should be present into the meeting. He can attend the meeting either by way of physical presence, by way of video conferencing, or any other audio visual means in accordance with Rule 3 of Companies Act 2014 rules, whatever is provided. So these are the ways by which a director can attend the meeting. Now moving on to section number 173 subsection 3 and subsection 4 also. A meeting of the board shall be called by giving a notice of at least 7 days in writing, and written notice is to be issued to all the directors at least 7 days prior to the meeting. All the directors at the registered office we have to issue the notice to be issued at the registered office, sent by the hand delivery, by post, or by electronic means such as your email also. Now there is an exception, there is an exemption given. A short-term notice of less than 7 days can also be given to transact an urgent business. Okay, in order to transact an urgent business, at least one independent director should be present there, if any, into that kind of meeting wherein the notice period is less than 7 days, and in the absence of decision taken by decision taken shall be circulated to all the directors and shall be final only on ratification thereof by at least one independent director. You can conduct a meeting by giving a notice of less than 7 days, that is fine, to transact a urgent business condition. Now the second condition says that there should be an independent director present into the meeting, if any. Apart from that, let's say there is no independent director, then decision shall be taken by circulating all the directors. Whatever decision is taken in the meeting, it is to be approved only upon once it is circulated to all the directors and only upon ratification of at least one independent director. So this for the provision with respect to shorter notice in case of board meeting. Now moving on to the option to participate through video conferencing. Every notice shall also provide the director the option to attend the meeting by way of video conferencing. This video conferencing or maybe by audio visual means, video conferencing by other audio visuals means, and it is to be provided to the director. Upon receival of the notice from the company, the director shall intimate his intention to attend the board meeting, to whom it should be intimated to the chairperson or the company secretary of the company. Either of them it is to be served. The director shall intimate his intention to attend the board meeting by way of audio visual means or by way of video conferencing. If no intimation is sent by the director, then it will be presumed that director is going to attend the meeting physically coming into the meeting. So these are the provisions with respect to attendance in meeting. Exemption relaxation from applicability of section 173 subsection 1. So section 173 subsection 1 talks about the first meeting is to be conducted within 30 days and subsequent meetings every year 4 meetings to be conducted, and the gap between the 2 meetings shall not be more than 120 days. Now this section is not applicable in case of a company prescribed class of companies. For example, section 8 companies, at least one board meeting should be conducted in at least one meeting within 6 calendar months. That means in every calendar year there should be minimum of 2 meetings to be conducted in case of section 8 company. But in case of one person company, dormant company and startup company, they shall be deemed to have complied with these provisions if at least one meeting of board has been conducted in each half calendar year and the gap between the 2 meetings is not less than only 90 days. In case of section 8 company, 2 meetings is to be conducted in every calendar year. In case of one person company, dormant company, private limited company which is a startup recognized by DPIIT, at least one meeting is to be conducted in every 6 months, and apart from that the gap between the 2 meetings shall not be less than 90 days. So please keep these timelines in mind, because an MCQ can be framed from these timelines for sure. Now in case of one person company, if there is only one director, then it is not required to hold even a single board meeting during the financial year. अब क्या एक meeting के अंदर एक director है, what the meeting he will be conducting. So in case of one person company, if only one director is there, then there is no need to conduct a meeting also. Now section 174 talks about the quorum into the meeting. So what should be the quorum in the meeting? So in every general meeting, every meeting of the board, the quorum shall be either 1/3 of the total strength of 2 directors, whichever is higher. Let's say there are total number of 9 directors. So 1/3 of total directors is 3 directors, or 2 directors, whichever is higher. So 3 or 2, whichever is higher. That means minimum of 3 directors should be present into the meeting in order to have a valid quorum into the meeting. So this is with respect to general meeting, board meeting. Now for section 8 companies, what should be the quorum? So these quorum provisions are not applicable to section 8 companies. Section 8 companies के लिए this provision is there. Quorum should be either 8 members or 25% of the total strength, whichever is less. However, the quorum shall not be less than 2 members. So please keep this in mind. Let's take a scenario. There are total number of 10 directors. So 8 members, let's say 8 members are there. Now out of total number of 10 members, let's say 25%. So 25% would be 2.5. So we know that wherever there is a proportion, we will consider the higher number. So let us take the 3. So 8 or 3, whichever is lower. So 3 is the minimum number of members that should be present into the meeting. But there is one more condition that says that quorum shall not be less than 2 members. So at least 2 members should be present in the meeting after considering the above requirement. Now the quorum when director participate through video conferencing, a director who has opted to attend the meeting by way of video conferencing, then in such a case the director who is attending the video conferencing by way of the meeting by way of video conferencing or either audio visual means, then he shall also be considered for the purpose of quorum, for the purpose of board meeting. So this provision talks about this one. Now where quorum is less than prescribed under the Companies Act, where the quorum of continuing director is reduced, the continuing director may act for the purpose of increasing the number of directors to that fixed of the quorum of summoning a general meeting of the company, where at any time the member of interested director exceeds or is equal to 2/3 of the total strength of the board. Interested directors provisions, we will be subsequently reading section number 183, 184 talks about interested directors. So in any meeting, if the interested directors are more than 2/3, then the quorum shall be in accordance with section 174 subsection 3. So what does this say? The quorum number of directors who are not interested and the present in the meeting shall be considered for the purpose of quorum. However, such uninterested or disinterested directors shall not be less than 2 directors into the meeting. So please highlight this. So let me sample this provision for you. Let's say there are total number of 10 directors, out of which how much directors are we required to have? At least 1/3 of directors or 2 directors in accordance with section 173. So let's say 1/3 of 10 directors, 1/3 of 9 directors would be 3 directors and 2 directors. So whichever is higher, let's say 3 directors is the quorum into the meeting. But there is a condition that saying that out of 9 directors, total number of 6 directors are interested directors. Let's say total number of 7 directors are interested directors. Interested directors definition we are going to learn in the subsequent part of the video. So out of total number of 9 directors, 6 directors are interested. Now we have to calculate 2/3 of 9 for the purpose of section 174 subsection 2 and 3. So 9 ka 2/3 would be 6. Exactly 6 number of interested directors are present into the meeting. In that case, you have to see what is the number of disinterested or uninterested directors into the meeting. So the disinterested or uninterested directors are 3 directors present in the meeting. Now you have to see whether those directors are less than 2 or not. So 3 directors are not interested into the meeting. So those directors are not less than 2 also. So accordingly the quorum is present into the meeting. I hope you understood the example. If not, please mention in the comment. I will try to make it more simpler for you by way of replying to that comment. This one you can read on your own. Now, where a meeting of the board could not be held for want of a quorum. Let's say quorum was not present, and because of which the meeting was not conducted. Now, what should be the scenario? Now, the section 174 subsection 4 says that the meeting shall automatically stand adjourned to what date? To the next same day, same time, and the next week. In the next day, on the same day, let's say on Wednesday, I had to conduct the meeting at 3 o'clock. So quorum was not present. So the next meeting, the urgent meeting is to be conducted on the next Wednesday at 3 o'clock at the same place, same time. That's what these provisions talk about. If that day is a national holiday, then till the next succeeding day, which is not a national holiday, at the same time and place. Let's say next Wednesday is the public holiday. So now the meeting is to be conducted on Thursday if it is not a public holiday, and at the same time and the same place it is to be conducted. Now moving on to section number 179. Before that, let us go ahead with section number 175, resolution by circulation. There can be a scenario. Okay, before starting with the section, let us understand some general provisions. Now, resolution at the board meeting. So what kind of resolution can be passed? Ordinary resolution would be there where 50%, more than 50% would be voting with respect to a particular positive or negative side of the meeting. And there can be a unanimous resolution can be passed. What is a unanimous resolution? It is a resolution wherein all the directors present into the meeting votes in favor of a particular resolution, and none of the directors is and there is zero directors who are not voting into the meeting. So this is the meaning of unanimous consent, unanimous resolution passed into the meeting. Apart from that, how can a meeting be conducted? That we understood by physical board meeting, video conferencing, or by circulation meetings to be conducted. Now, if matter is of not so much of important, then what the board can do? Board can conduct instead of conducting a physical meeting, they can circulate a resolution. 2 or 3 directors will meet, they will pass a resolution and will circulate to all the directors. Now all the directors to their registered office will be sent either by way of hand, by way of post, or by way of electronic mode. The resolution will be circulated to them. So this is the provision with respect to resolution by circulation. Now what they have to do, either they can accept or they can reject. Now if 1/3 of the total directors insist the company to conduct a physical meeting, in such a case the company cannot pass a resolution by way of circulation. The company has to conduct a physical meeting. This is what this provision says. Section number 176 talks about defect in appointment of directors not to invalidate the actions. Let's say a director is appointed in accordance with the provisions of appointment and qualification of directors, whatever we learned in the previous chapters. Now the appointment was invalid. The director was not having a valid director identification number, or for example the director was debarred from being the director of any company. In such a case, if such a reappointment is made and such a person is being appointed on the board as a director, then in such a case, whether the action taken by such director will be valid or not, this particular section talks about that. So section 176 clearly says that if there is a defect in appointment of director, then it shall not invalidate the actions of the directors. Means whatever the actions has been taken by the director who has been appointed by way of defect, then all the actions will be valid. This is what this section particularly says, and this section is not applicable to decision taken by director after company notices such defect in appointment. Let's say company got to know that there is a defect in appointment of such director, and after that if any action has been taken, then this section is not applicable. Then all the actions that has been taken after the company got to know that such a director is invalidly appointed, then all the actions taken by the director will be invalid. This is what this particular section talks about. Moving on to section 177, audit committee. सेम क्राइटेरिया एज ऑफ योर इंडिपेंडेंट डायरेक्टर. लिस्टेड कंपनी के लिए रिक्वायरमेंट है, लिस्टेड पब्लिक कंपनी के लिए लिस्टेड पब्लिक कंपनी और पब्लिक कंपनी हैविंग पेड अप कैपिटल ऑफ 10 करोड़ और मोर, टर्नओवर ऑफ 100 करोड़ और मोर, लोन बोरिंग्स डिपॉजिट्स or debentures more than 50 crore. Keep this in mind. This is more than, not more than, equal to. All these are less than, more than, equal to. This is also more than, equal to. So please keep this in mind. Composition, please read it on yourself, because this one you have to self-study. Then only you will be able to remember it. Now, certain companies are not required to form audit committee. Joint ventures, wholly and subsidiary, and dormant company, the same requirement as provided under section 149 of your Companies Act, that is independent director provision. Let's say a company does not meet all these three criteria for a consecutive period of 3 years, then in such a case the company is not required to form an audit committee. This is what this particular provisions talk about. Alright, now visual mechanism or listed companies, and apart from this, any company including a private limited company who is accepting public deposits or borrowed money which is more than 50 crore or as per last audited balance sheet. This is the visual mechanism or requirement in accordance with our section 177 of Companies Act. Section 178 talks about nomination and remuneration committee. So it is mandatory, same as audit committee. Whatever we learned in audit committee, independent directors, and nomination and remuneration committee, all the three committees, it is same requirement, that is listed company and every public company having paid up capital of 10 crore or more, turnover of 100 crore or more, loan, borrowing, debentures, deposits more than 50 crore at any, during the previous year. Composition, please read it your own self. Minimum 3 non-executive directors should be there, at least 50% independent directors should be there. Chairperson may be appointed by board but cannot chair the committee. Okay. Now section 178 talks about stakeholders relationship committee. This is mandatory for company with more than 1000 shareholders, debenture holder, or deposit holders. If either of them are more than 1000, then company mandatorily have to have a stakeholder relationship committee. Now the constitution, chairperson would be non-executive director, members are to be decided by the board of directors. I would recommend you to refer section number 179, 180 and 180 to 192 of sections. I would recommend you to kindly read it your own self, because these are not much relevant sections. These are just kind of, if you give a clean reading, you will be able to understand. Okay, so we have studied till section 171. Okay, now let us go on to this page we had skipped over here. Section 179 talks about what? Power to be exercised by the board. What are the power that board should be exercising? So this one you should definitely read it on your own and you will be able to understand. So what are the powers that board is having? They can get into all this without even passing a special resolution. Okay. Now, now the board may, by passing a resolution at the meeting, delegate the power specified in D to F. What is D to F? So D is basically your to borrow money, to invest in funds of the funds of the company, or to grant loan or give guarantee or provide security in respect of loan. If these three are to be conducted, then the company, by way of passing the resolution into the meeting, can delegate these powers to whom? To the committee of directors, managing director, or any principal officer of the company. This is what section 179 talks about. Now, additional power prescribed under Rule 8 of Companies Act. Companies, a board can make any kind of political contribution, can appoint or remove key managerial personnel, or appoint internal auditor or secretarial auditor can be appointed by the board of directors. This is what your section 179 overall talks about. Now let us move on to the next pages. Now, restriction on power of the board. What is the restriction that has been implemented on the power of the board? What are the transactions that board of directors cannot exercise on their own? The board of directors of a company shall exercise the following powers only with the consent of the company by way of special resolution. If company has to conduct any of these 4 transactions, then company has to pass special resolution. What are these 4 transactions? To sell, lease, dispose of the undertaking wholly, substantially of the whole of the company, or its own, that is more than one of the whole, or substantially the whole of the such undertaking. It means if a company is going to sell or lease or dispose of any kind of undertaking which is substantial in nature. So what does the substantial means? Substantial means, that means the net worth of that company is more than or equal to 20% of the company, or the revenue generated from that company is 20% or more of such company. Then that company is to be considered as a substantial company. So if you are going to sell, lease or dispose of one or more of such kind of substantial company, then in that case you need to pass a special resolution into the meeting. To invest in the trust securities of the amount of compensation received as a result of merger or amalgamation. As a merger of amalgamation, you received some amount. Now, if that amount you are going to invest into the trust securities, in that case you are required to pass a special resolution. And this MCQ was asked in my examination. So this is again a very important point that you can keep in your mind. Now borrow money together with the money already borrowed by the company exceeding aggregate of its paid up share capital, free reserves of securities premium. Let's say company is so this particular point number C talks about the borrowing of money. If company along with the outstanding borrowing, if borrowing more money, then the total combined borrowing shall not exceed 100% of its paid up share capital, free reserves or securities premium. If it is exceeding 100% of paid up share capital, free reserves or securities premium, in that case, the company is required to mandatorily pass a special resolution to remit or to give time for the payment any due from the director. If there is a you are going to allow more time to the director in respect to debt due from the director. In such case, also you are required to mandatorily file a pass the special resolution into the meeting. Okay, so what does the substantial mean? So you can read this on your own. Any special resolution passed by the company consenting to the transaction may stipulate the condition. This one is very simple to understand. Now restriction as to borrow the money under clause 3, section 180, subsection 2, clause subsection 2 and subsection 5. Now every resolution passed by the company in general meeting in relation to borrowing of money shall specify the total amount up to which the monies may be borrowed by the board of directors. I hope this is understandable by way of plain reading only. No debt incurred by the company in excess of the limit imposed. Please read it on yourself. If you not read it, this will be more than enough. Now section 180, entire section 180 is not applicable in case of a private company. So what is section 180? Section 180 talks about restriction on the power of the board. So whatever restrictions are on there, these are not applicable in case of a private limited company. This is what the exception to section 180 talks about. Now power of board of a company to make contributions. So apart from this also I had got 2 MCQs from this particular provisions also, section 182, 181, 182 and 183 of the Companies Act. Now to bona fide charitable fund, if you are going to make any kind of contribution to the charitable trust, then if you are making contribution in excess of 5% of the average net profit of the immediate 3 preceding financial year, then in that case you are required to pass a resolution in the general meeting. This can be made only after, more than 5% can be made only after passing a special resolution. If you are making less than that, then company, the board of directors can make such contribution. Political contribution, on this I got an MCQ. What is the maximum amount of remuneration, what is the maximum amount of contribution that a company can make to a political party? So there is no limit that is prescribed under the Companies Act 2013, and a company may contribute any amount to the political contribution. However, there is a condition, there is an exception saying that it should not be a government company or a company which is in existence for less than 3 years. If those 2 conditions are not satisfied, then you cannot make any public political contribution. Otherwise, you will be able to make political contribution to any political party of any amount. National Defence Fund, read it your own self, not of much of importance. Now, disclosure of interest by the directors. We have studied about interested directors, disinterested directors. So this provision talks about who is interested directors or on whom these provisions are applicable. So section 184 is applicable to all the directors of the company of all kind. Now, what does it talks about? Now, okay. Let us understand this now. Yes. When you will consider a person is to be interested into the company, if such person is holding more than 2% of the shareholding of either that body corporate or is a promoter, manager, CEO of that body corporate, if you are somebody who is holding more than 2% of any body corporate, or you are promoter, CEO, manager or of that body corporate, or you are with a firm or other entities in such firm, such director is a partner, owner or member as the case may be. Okay, you are holding more than 2% with a firm or other entity in which such a director is a partner, owner or member as the case may be, or there is a third condition that also talks about the director shall okay, these are only 2 conditions that talks about. Okay, either you yourself or your manager, promoter, CEO is holding more than 2%, or you along with the firm or other entity in which such director is a partner, owner or member as the case may be holding more than 2%, then you would be considered as the interested director. However, you should read this exception. If it should be more than 2%, even if it is equal to or less than 2%, then the provisions of section 184, that is interested director provisions, are not applicable to you. Alright. Now, when to disclose when to disclose your interested directorship into the meeting. Now it should be disclosed at the first meeting of the board in which you participate as an interested director. Thereafter, at the first meeting of the board in every financial year, and after, whenever there is a change in the disclosure already made by the then at the first meeting of board, whenever there is a change into the interested directorship. So this is what talks about when to disclose your interest into the company, in which meeting you are going to disclose. So this can be also potential point for MCQ to be framed into the examination. This one we talk about. Now this one you can read your own self. Now what is the manner of disclosure? How you will make a disclosure? By written notice in form MVP1, and it is to be registered, it is to be made at the registered office of the company. All the notices shall be kept at the registered office of the company, and for what period it is to be preserved? It is to be period for a period of 8 years from the end of the financial year in which this relates to. This is what about your section 184 talks about. This whom custody, it is to be in custody of company secretary or person authorized by the board. Now, what are the consequences of non-disclosure? Fine of 1 lakh rupees can be levied, or it should be voidable of the option of the company. If you are not disclosing your interest in the company, then any resolution passed in that particular meeting shall be void at the option of the company, or there can be a penalty that can be levied upon the director, which may up to rupees 1 lakh. Section number 185 talks about loan to the directors. It talks about whether loan is to be granted or not. One of the most important provisions of this particular series. Now it talks about no company shall directly or indirectly provide any loan, including the loan represented by book debt, provide any security or provide any kind of guarantee to whom? To any director of the company or subsidiary or holding company, any partner or relative of such director, or any firm in which such director is or their relative is a partner. So no loan is to be provided for these three kind of persons. Now condition when a company may advance loan or provide guarantee or provide security to the directors or the board partner firm in which such director is a partner, or a relative or partner of such director. When can it be granted? So it says that a company may advance any loan, give any guarantee or provide any security in connection with any loan taken by any person in whom any of the director of the company is interested, only when by way of passing a special resolution is passed into the general meeting along with the explanatory statement. The loans are utilized by the borrowing company for its principal business activities. Then only a loan is to be granted. These two conditions are to be satisfied simultaneously. Then only a loan can be granted by the company. This page is blank. Okay. Yeah. Now, who will be any person in whom any of the director of the company is interested? You see here the word given is any person in whom any of the director of the company is interested. So what does this mean? This means that any private company of which any of such director is a member, any body corporate at a general meeting of which not less than 25% of the voting power may be exercised, controlled by any such director, or by two or more of such director together, or any body corporate, the board directors who is accustomed to act in accordance with the directions or instruction of such particular person. In that case, the loan can be granted. Now, exception to section 185. What does it talks about? Giving of loan to a managing director or whole-time director as a part of condition of service extended by the company to all of its employees. Matlab, as a part of condition that the service will be extended by such person as an employee of the company. In that case, loan can be granted to the managing director or whole-time director pursuant to any scheme approved by the member by way of special resolution. But for this, a special resolution is to be passed for this particular scheme. The second point is kind of a company which is in the ordinary course of business. With the business of the company is to provide loan to the company. In that case, the loan can also be granted. This is what this provision talks about. Now, any loan made by a holding company to its wholly owned subsidiary company, any guarantee or provided any security by a holding company in respect of any own loan made to the holding or subsidiary company. Matlab, a loan can be provided to the wholly owned subsidiary company. Guarantee can be provided, security can be provided, provided loans are utilized by the subsidiary company for its principal business activities. You understood? It is wholly owned subsidiary and not the subsidiary company. So please keep this in mind. Now, if you contravene the section 185 to section 4, so this is the chart for your reference. Please have a look at it. Now, moving on to section exemptions. Exemptions you may read on your own. loan and investment by a company, section 186. What does this talks about? Now, investment by a company. A company shall, unless otherwise prescribed, make investment through not more than 2 layers of investment companies. Let's say a particular company A is there, it can make investment into subsidiary AA. It can further make investment into subsidiary AAA, but it cannot make investment into subsidiary 4 times A. So maximum 2 layers of investment can be made. However, there is an exemption, so that this exemption is granted to make acquire foreign companies basically. Okay, so a company from acquiring, so these provisions does not prohibit a company from acquiring any other company incorporated in any country outside India, a subsidiary company from having an investment subsidiary for the purpose of meeting of the requirement of any law for the time being in force. In such a case, a company can have more than 2 layers of what? 2 layers of investment companies. Now, sealing on the investment. So this is again a very important section. So no company shall give any person or body corporate any loan, give any person any body corporate guarantee or security, or acquire by way of subscription, purchase or otherwise securities of any body corporate. However, exceeding how much? Exceeding 60% of its paid up share capital, free reserves of securities premium, or 100% of free reserves of securities premium, whichever is more. A company shall not acquire or made investment into any company exceeding 60% of its paid up share capital, free reserves or securities premium, or 100% of its free reserves or securities premium, whichever is higher. It can make maximum amount of investment or can grant loan to this extent only. However, unless it is also to be approved by way of special resolution. Matlab, if a company wants to invest exceeding this particular limit, then company is required to pass a special resolution into the general meeting. However, where a loan or guarantee is given, or where a security has been provided by a company to its wholly owned subsidiary or joint venture, acquisition is made by a holding company by way of subscription, purchase or otherwise of the securities of the wholly owned subsidiary company, previous approval or by way of special resolution is not required in general meeting. If this investment you are making in wholly owned subsidiary company or joint venture, then special resolution is not required into the meeting. This was with respect to this particular thing. Disclosure by the members, not so relevant. This one you can read on your own. Okay, provided before making any kind of investments, you need to have approval of public financial institutions, where the agreed of the loan and investment so far made, the amount for which the guarantee or security so far provided to or in all other bodies along with the investment, loan, guarantee or security proposed to be made exceeds the limit prescribed in the section 186(2), then in such a case, apart from the special resolution, you also need to have approval of public financial institutions. So section 186(2) is nothing but this one. This one talks about the limit, the maximum amount of investment what you can make. A register should be maintained for this particular investment, kept in the registered office, and it should be open for the inspection. Now, for whom this is not applicable? This is not applicable for a banking company, insurance company, housing finance company, business or financial industrial enterprise, and infrastructure facilities wala business. To any investment by way of investment company shall allotted in pursuance of section 62 subsection 1 clause A. So this is what section 186 exemption talks about. Now there is something called as this is not of relevant. You can cross it out. Yeah. Okay. So what is the penalty if you contravene? Please read to your own self. Section 186 talks about investment of a company to be held in its own name. All the investments of the company, whether in fixed deposits, whether by way of shares, whether by way of properties, are to be held in the name of the company only. Property, security or any other assets are to be held in its own name. However, the company may hold any share in its subsidiary company in the name of nominee or nominee of such company if it is necessary to do so. So when is this applicable? Whenever you are subscribing, whenever you are incorporating a wholly owned subsidiary company, in such a case minimum number of two subscribers to the memorandum are required. In such a case, a company's promoter would be the second subscriber to that particular memorandum of association. In such a case, these provisions are not applicable. So this is what this talks about. Following investments is allowable to the company. Please give it a reading. It is very simple to understand. Now related party transactions. So who is a related party? If you read this chart now, you will be able to easily understand it, because this has been made in such a crisp and concise manner that it would be very easy to understand. These are some of the provisions that you should be referring to once. Now so what kind of transactions you need to have a related party transaction? So sale, purchase of supply of goods, selling of any kind of buying of property, leasing of property, availing or rendering any kind of services, appointment of agents, no such party's appointment to any office, place of profit in the company, underwriter's commission for kind of subscription, etc., etc. This table is important for you. Please give it a read. So here only this is net worth, 10% of net worth, rest all are 10% of turnover only. So this table you should read at least once. That's all. This one, transaction entered. Okay, this one is fine. This one is fine. This is fine. So yeah, all these are fine. Now these are, once you give it a reading, you will be able to really understand. I hope you like this particular video. If you have any other concerns, do let me know in the comment section. I will try to respond to you as soon as possible. Thanks a lot for watching.